IFRS 1 covers the rules for changing from any prior accounting standards to IFRS. The underlying premise is that the opening financial statements are to be presented as if the company had been under IFRS all along. In other words, retrospective adoption. For property, plant, and equipment, this could be a huge undertaking for a large company that has been in business for many years. Think of the work of reviewing all those assets, specifically reviewing assets that would have been recorded as separate components with different lives or depreciation methods. What if there were impairment indicators that caused an impairment under IFRS that was not recognized under US GAAP? Or what if there was an impairment that could now be reversed? The IASB recognized these issues and provided some exemptions to the general premise. Appendix D of IFRS 1 has a provision called fair value or revaluation as deemed cost. This exemption was developed for entities that may not have good historical cost records, but it is available to anyone. Under this option, you elect to measure an asset at the date of transition to IFRS at its fair value. That fair value becomes its deemed cost at the measurement date. From that point forward, you account for the asset as you would normally under the cost or revaluation models. Interestingly, this exemption provides an opportunity for companies to cherry-pick appreciated assets, a piece of land, for example, and restate its cost at fair market value. This exemption also provides an effective method to accurately componentize large assets such as a building. It may be more practical to get an appraisal on a building and its major systems than to review the company's historical records and apply IFRS retrospectively. Alternatively, a first-time adopter may elect to use a previous US GAAP revaluation for an asset at or before the date of transition to IFRS as the deemed cost at the date of revaluation. This can be done if the revaluation was, at the date of revaluation, broadly comparable to either the asset's fair value or its cost or depreciated cost in accordance with IFRS. You may have established fair value for some or all of your assets at a particular date because of an event, such as a privatization or initial public offering.